What's up, guys? Today I'm be going over basically today's trade, and today I took a call to the upside, and basically what I was looking at and how I held my trade, right? So first thing that happens, market opens, we gap down, right? So right now I'm trying to look for our lows and look for highs, right? So right now we have this low, we have that high. That's kind of far out, but yeah. And we have this low, right? So if we have a break of one of these lows, we could continue lower, right? So if we kind of go on the higher time frame, this low could be a low where we could break and continue lower, or we could break, have one of those sweeping candles, have some type of initial reversal confluence to continue higher, right? Same thing I would have done for right here. If we actually broke this low, get some candles underneath this low, then I'll be looking for downside movement, right? But if we get a sweep of one of these lows where like we just get candles that don't close under, but we just wick under these lows, then yeah, I'll be looking for potential reversal trends, right? So we open up, we have a gap up, right? I mean a gap down, right? Gap down, come to test that gap, we continue lower, right? And prices basically move from liquidity to liquidity. We go lower and we basically take out this low, right? We take out that low, insert that new low, and then we could kind of just, could kind of get rid of that. Kind of see that low got taken out. We could kind of mark it like this. And as well, we also have to look on the other time frames, right? Because we could also see that we have a fair value gap, right? Yeah, this bearish fair value gap that got inverse, right? But do we know it's an inverse, right? So obviously we could tell it's inverse, but what I'm trying to tell you guys, is it a proper inverse, right? Would I want to take this trade to the upside? Well, we kind of can't really determine that on the 5 minute. Well, we could see that we kind of just swept this low, right? Where we just have those candles wicking down underneath it. Not really any candle closes underneath, right? Like those full bar candles, right? Where it's kind of like this, right? We could go on the 10 minute. We could really now see that we just kind of swept those lows, right? Where we have those type of wicky candles, right? Go on the 15 minute. We could also see the same thing, probably like 30 minute. That's kind of a little bit over exaggerated. Um, Obviously, this is going to look different on the smaller time frame, right? So we could go on the smaller time frame and basically see how our trade is going, right? So we could see now that we kind of just swept this low, right? And if we could also go on those higher time frames, right? We could kind of see where price was trying to retrace to, right? We could mark this higher time frame low, right? Higher time frame low, take it to that high, this high right here, right? We kind of look, it looks like we were kind of drawing back down to this equilibrium, or however you want to call it, 0.5 level, or just the middle of this basically retrace Fibonacci shit, right? So obviously equilibrium sounds like hella retarded, right? It kind of sounds like a big vocabulary word. What basically equilibrium means is just where price kind of just retraces to, right? So we come up and then we kind of come down. Usually you'll see a fair value gap, or not usually, but the setups you will want to take would be basically if there's a fair value gap underneath the 0.5 or on the 0.5, basically supporting your trade to continue higher, right? Back to the zero, right? So you'll have basically some type of long like this, right? Taking it to the zero, right? All right. Can I get rid of this, right? So basically that was kind of like the initial trade I had in mind, right? Now we have that inverse of that fair value gap. Now we kind of just got to wait for our entry, right? So automatically right there, you could kind of take a entry, right? You could take your entry, but right there, your cons are kind of hot, right? Because we just kind of came from the downside and now we're basically on calls um, highest price premiums. Does that make sense? Ah, fuck, I don't know why I asked the question, but what I basically mean is your contracts to basically to take calls to the upside, right? They're going to be kind of expensive, so I'll just wait for a retrace into this inverse fair value gap, either inside or on top. Since this is a small one, I wouldn't mind entering a little bit more than a light position on the tip, right? So we kind of wait, right? We see that we got tapped in right here, so that's where I took my trade, right? Got tapped in right here, also had room to add, right? So I had 3 targets for this, right? Obviously, set your stop loss to either this, underneath this inverse fair value gap. Some people like taking their trades like a little bit too down, so it could either be underneath this inverse fair value gap, which I would have done, or if you're kind of crazy, then underneath this low, right? Some people do that. It all depends on your risk management. However, mine's is kind of different, so it'll just kind of be like right underneath there, right? So now what I'm trying to look for is kind of go. I mean, we could instantly see that we have these higher lows, right? So we have these higher lows to basically take out, right? These are not my take profits, right? These are not my take profits, but more of just kind of like a barrier I need to break to continue higher, right? Because every single trade, right, we always have things that are kind of keeping us down, right? So as of right now, we see these lower highs are keeping us under, right? So what I want to see are bullish fair value gaps and basically kind of closes above these highs, basically breaking those highs. We could probably see them on a smaller time frame, right? Smaller time frame, we could see them for sure. Yeah, right there, right? And we could also see that we have that market structure shift, right? So my 3 targets were basically the high of day, which would have been right here. High of day, the middle of this gap, so here, and then the next point up, right? So now I have 3 targets to basically take this trade to the upside. This looks like a good risk to reward, and as of right now, I'm already in profits, right? So as soon as I got in the trade, right, I was up already how much? I was up 45%, right? So I was up 45%. Now what am I looking for? I'm basically looking for things to hold my trade. What are those things? Basically breaking those highs, right? So we broke this high, we could kind of take that out. We broke this high, we could kind of take that out. We could also see we created a bullish fair value gap, right? So now we could kind of use these as our new support, basically dragging our stops above this, right? Making this trade now go red. So this is what I do to basically hold the trades, right? I'm trying to break these higher lows, or if you were playing to the upside to the downside, it'll be the lower highs, right? Broke that, got counter closes above, created a new fair value gap to basically hold my trade. So now instead of this fair value gap, I'll use this fair value gap to basically stop out, right? So we already see that we reached our first take profit, right? That first take profit was at 90, 100%, right? I sold the majority of my position there to basically now let my runners run, right? So I had like 5 runners, and I was just selling as we were going up, right? Because obviously I'm trying to reach the third take profit. I'm trying to look for any other confluence to basically reach those target points, right? So obviously I'm not gonna let those runners go fucking red, bro. So that's why I kind of just place my stops underneath this fair value gap, or on Webull you could kind of go on your order, right? Hit a sell stop loss order and then basically automatically have it sell for you, right? So we see that we broke this high, right? Not break this high, but we kind of see that we kind of broke this mini high, reached our second take profit, right? And from there, I was already up 110%. And then now I sold the majority of my runners. I was left on 2 runners. And now we want to see if we can hold this fair value gap, right? However, since I had that sell stop loss order at 50%, right? Since we kind of came up, I had that 15% thing somewhere right here. But then we kind of just came up and then it kind of just changed, right? So I actually kind of got stopped out at 50% on my last 2 runners. But if I were to hold those 2 runners, right, we could have seen that this fair value gap was supporting, right? So now what you want to see is basically a break of this high to continue lower, right? So we see we kind of just retrace back down to not this high, but the middle of this gap, right? I targeted this middle of the gap because sometimes we see some sort of rejection in the middle, right? If we get kind of close above, we could kind of fill in the gap, right? Which is basically another thing that we're going to want to see to reach our third take profit, right? So we see that we were getting supported by this fair value gap. We see that we push higher, and we see that we ended up taking out this high, right? So now this trade, if I held this trade, it would have been more bread, but this trade now looking like this, right? Which is overall a decent amount. Pretty sure if you were to held, it would have been another 5%. So it would have been 120. I'm not sure. I couldn't really check it. It didn't tell me. Right. And from here, we could see that I'm pretty sure we just kind of came down from here. We see that we created that new bullish fair value gap, right? See that we kind of almost closed underneath, but we kind of pushed up. However, I'm pretty sure this fair value gap didn't hold throughout the day, right? So now your new stop for your runners would have been underneath this fair value gap. You can see that we're kind of breaking this fair value gap, right? And we have that kind of close, and then yeah, we kind of just stop out on the runners, right? And like I said, usually I set my target points on reasonable areas of the chart. Why? Because on the middle of this gap, I'll expect, my fault, English my first language, but I'll expect basically a sell-off somewhere right here where we basically had just that, right? So our trade was now kind of like this, where I kind of just held it to my second take profit. We couldn't really have those other confluences where we could fill in this gap or hold this fair value gap to continue to our third take profit, right? So we would have been out on our runners, and we could kind of see that rejection to the downside on the middle of the fair value gap. So if you were basically waiting for that, then the downside would have been nice for you, right? Not sure how today's going right now. Looks like we came down, got some sort of liquidity right around here, came back to our entry point to the downside. If you were taking the downside, this would have been your entry point because we inversed that fair value gap, right? Came back to the entry point, came down a little bit lower. Not a little bit lower. We kind of came down low, but we didn't go down lower. So yeah, this trade is kind of its own separate trade, right? But yeah, that was basically my trade from the downside to the upside.